Hi, this is Ron Siegel of Ron Siegel Radio and Gold Star Mortgage right here in beautiful Southern California with your real estate tip of the day. Tax return depressing? Owning a home could help. Many Americans got some depressing news last week. Either their tax return was not as large as they had hoped, or in some cases they were told they owed additional money to either federal or state government or both. One way to save on taxes is to own your own home. According to the Tax Policies Briefing Book, A Citizen's Guide to Fascinating, though often complex, elements of the federal tax system, there are several tax advantages to home ownership. Here are 4 items and a quote on each from the briefing book. Number 1, mortgage interest deduction. Quote, homeowners who itemize deductions may reduce their taxable income by deducting any interest paid on a home mortgage. The deduction is limited to interest paid on up to $1 million of debt incurred to purchase or substantially rehabilitate a home. Homeowners may also deduct interest paid up to $100,000 of home equity debt, regardless of how they use the borrowed funds. Taxpayers who do not own their own home have no comparable ability to deduct interest paid on debt incurred to purchase goods and services. Number 2, property tax deduction. Homeowners who itemize deductions may also reduce their taxable income by deducting property taxes they pay on their homes. Number 3 is imputed rent. Buying a home is an investment, part of the returns from which is the opportunity to live in the home rent-free. Unlike returns from other investments, the return on home ownership, what economists call imputed rent, is excluded from taxable income. In contrast, landlords must count as income the rent they receive, and renters may not deduct the rent they pay. A homeowner is effectively both landlord and renter, but the tax code treats homeowners the same as renters while ignoring their simultaneous role as landlords, as their own landlord. Profits from home sales. Taxpayers who sell assets must generally pay capital gains tax on any profits made on the sale. But homeowners may exclude from taxable income up to $250,000, $500,000 for joint filers of capital gains on their sale of their home if they satisfy certain criteria. They must have maintained the home as their principal residence in 2 out of the preceding 5 years, and they generally may not have claimed the capital gains exclusion for the sale of another home during the previous 2 years. The bottom line, I'm not suggesting that you purchase a house just to save on your taxes. However, if you have been on the fence as to whether 2017 is the year you should become a homeowner, this information might help with that decision. If you're out shopping for a new home, here are some tools for you. Text NEST, N-E-S-T, to 79564 to start a home search with no advertising. Text HBG to 79564 for our free home guide, things to consider when buying a home, and finally, to get pre-approved for a same-as-cash home loan, our Fast Pass. Simply click the Apply Now button on our website, SiegelLendingTeam.com, to get started today. Again, Ron Siegel Radio and Gold Star Mortgage, chatting with you from beautiful Southern California. Have a great day.